Hello, everyone, and welcome to the GoNoGo show. It's just me today. Tyler is back on the road, so I'm going to do my best as a solo act to walk you through the markets using GoNoGo charts. So let's start, as we always do, with the asset class heat map. What we're going to do is walk through from the top. The equity markets are in the top panel. You can see that they have remained in a go trend. In fact, have strengthened again as we speak today. Today being Friday, the last day of the week, we see the equity market strengthening once again, painting a bright blue go bar. Treasury bond prices have been in a period of uncertainty now for several bars. You can see amber go fish bars for Treasury bond prices. Of course, bond prices move inversely to rates. We'll take a look at rates in a minute. Commodity prices, commodities here, the USCI is the commodity index, has come out of this go trend that it wasn't in for very long. So it's been really struggling to find direction, the commodity markets as a whole. And you can see that we're painting an amber bar, a go fish bar that represents uncertainty for commodities. And the dollar having come back into a go trend, strengthening again at the end of the week to paint a brighter blue bar. So let's now, we'll take a look at the complete GoNoGo chart for each of these assets and others to take a look at what's really happening from a trend following perspective. So let's start with the S&P as we typically do. You can see here we had a couple of days of falling away from the high that we saw at the beginning of the week, but now today has been a very strong day so far. We'll see if we can close in the next 30 minutes or so, just about where we are, but a real strong day today. We opened right up by the close from yesterday, and we've powered to another new high, which is really quite incredible. GoNoGo oscillator in positive territory, not yet overbought. So let's just take a pause really quickly. If you're new to watching our shows, GoNoGo charts, we take the foundational concepts and principles of technical analysis and blend them into one set of tools that can give you a complete overview of technical analysis on any security. So with that being said, what we do in the price panel is take a disciplined checklist, a step-by-step approach to give you some confidence that you're using a weight of the evidence system to tell us what we want to know about the trend. And then we color the price bar according to the strength of that trend. So you can see that these blue and aqua bars are going to represent an uptrend or a go trend. And these purple and pink bars would be a no-go trend or a downward move, a bearish move in the markets. If you see any amber bars, as we were talking about on that asset map, those are uncertain periods when not enough of the criteria behind the scenes are being met to tell us that we're seeing a trend in either direction. So we're going to paint those bars amber, and those are our go fish bars. And then we take the same approach with the oscillator on the bottom panel. We're going to blend the foundational concepts and principles of momentum analysis along with volume into just one oscillator that gives us what we need to know, but keeps our focus on price and just has that one extra panel below so that we don't get distracted by too many indicators. And then, of course, we've got the icons on the chart that highlight the important moments between trend and momentum. And so we'll talk about those as we go through. But a strong looking chart for the S&P, strong blue go bar, momentum in positive territory. If we look, this is on a weekly chart, you can see really now how strong this run has been. We had, of course, that one heavy correction throughout last summer, but then now a return to bright blue go bars and new highs almost every week. Momentum, of course, being positive as well. Like I said, we're going to go through some of the major macro factors that affect the market. So let's have a look now at Treasury rates. Treasury rates, of course, move inversely to bonds. So what we're seeing at the moment with the rates chart is that we sort of came back down to test this prior low. So we've been mostly in a no-go on Treasury rates. Rates tried to move higher and then have fallen away again. So that's obviously contributed to the strength of equity prices, lowering rates. But we're at a very interesting moment as we see the oscillator testing the zero line from below. So our oscillator was calculated in a way that would allow it to fall or rise to the zero line whenever the inputs behind the scenes are in their respective neutral territory. So whenever there is a lack of direction, wherever there's some tug of war perhaps between buyers and sellers, the oscillator is going to hit the zero line. So what that means is, if you look over here to the left of the chart, when a trend is in place, every time momentum cools, we can look to see whether or not it finds support at the zero line. And if it does, then we can say we're likely to see trend continuation. So we had a real blip here. We saw the oscillator break into positive territory, which was against the underlying no-go trend. But then as it's reversed, we've gone back below and are now testing that level from below. So an interesting moment here on Treasury rates. If we move on to take a look at a dollar fund to use as a proxy for the dollar, this is an ETF, UUP. You can see that the dollar has entered a go trend and is rising. So the sort of combination of falling rates and a falling dollar that was really strong for US equities for the last few months, end of last year into the first month or so of this year, we're seeing a little bit of a change here with the dollar rallying to paint go bars. So we're going to keep an eye on this. Obviously, we're a little bit below the highs that we had here late last year. So we'll see if that provides some resistance as we approach those levels. And if we back it out to a weekly chart, you can see that we didn't ever get out of the go trend, those weak aqua bars finally giving way to some stronger blue bars again. But again, a very important moment, as we talked about with rates, the oscillator testing the zero line. So for this go trend to continue on the dollar, we would want to see the oscillator break back above zero. Let's go to oil next. So oil, we go to the daily chart of oil, and we can see that oil had rallied strongly out of this max go no go squeeze. And of course, the squeeze grid, this amber grid, builds for every bar the oscillator is at the zero line. When that grid squeeze is broken, as you see it is here, crashes to zero, and the oscillator comes off the zero line, that tells us that momentum now has broken out of that period of neutrality and is in positive territory, which was confirming the new go trend in oil. And now, of course, prices reverse. We're seeing an amber bar as the oscillator is back to test the zero line from above. So if this is to remain positive, if we're to see go trend come back, we're going to want to see support here at the zero line for oil. So you can see already that there's quite a bit of inflection points to talk about, quite a lot going on in these macro factors. And whichever way we see these resolve will really have an impact on equity prices going forward. The other one, of course, that we like to look at is gold. Gold was in what looked to be a fairly healthy go trend, and then, of course, painted a number of weeks of uncertainty with these amber bars as the oscillator really struggled to get away from the zero line. Well, the last couple of bars, we've seen the go trend return, weak bars, but a go trend nonetheless, and the oscillator above positive territory and testing that level from above. So, of course, if you've been watching our show, if you've been following our research, you know that the situation for gold on the super long-term chart is really worth paying attention to. You can see here where I've got my cursor that this level has been such an incredible resistance level that we've really not been able to break above. But on this monthly chart, you can see how everybody's talking about this really massive cup and handle. This has taken well over a decade to form. And if we do significantly break above these levels, then that could be really, really bullish for gold. So good signs is that the oscillator is above zero in positive territory. We are painting strong blue bars, and you're seeing a lot of go trend continuation icons, these green circles, telling us that this trend is likely to continue. So we'll continue to watch to see if we can finally break higher on gold. But at the moment on the daily, lots of uncertainty as it really tries to hold on to this newer go trend. So those are the macro factors that are really having some kind of an impact on the equity markets. What I'm going to do now is move over to taking a look at the sectors within the S&P. So we like to get underneath the main market and try to get a sense of which sectors are outperforming and which sectors are driving the trend we're seeing in price. So if you remember, we are seeing quite a strong move in the general equity index. But when you look at it on a sector map, you can see that only 3 of the sectors are outperforming the major index. Of course, what we're doing here are creating the GoNoGo relative maps, and we're just applying the GoNoGo trend principle to the ratios of each sector to the S&P. So you can see in the top panel, we have the technology sector relative to the S&P, and then the GoNoGo trend indicator applied to that and visualized as a panel. So you can see the rotation between sectors as we move through time on the x-axis. So at the moment, we're seeing strength on a relative basis in technology, and we're seeing strength on a relative basis in communications. We're also seeing some strength in financials, and we had been seeing some strength in healthcare, but of course, that is now starting to struggle as well. So really, we're seeing a driving force coming from these growth sectors, technology and communications. Now, discretionary is not keeping up its end of the bargain here. We've seen some strong no-go bars on the discretionary sector. So it's really coming from technology and communications. So what we'll do is we'll go into the communications sector. This is very interesting at the moment. Bear with me as I just changed this. But if you look at the communications sector, you can see that that outperformance is really coming only from one area of that sector, and that's the internet sector. So this top panel is showing that over the last 2 or 3 weeks, there's been outperformance in the internet sector relative to the communications sector, which of course is outperforming the major S&P. So if we were then to go back to a GoNoGo chart and take a look at some of those securities within the internet sector, of course, all over the news has been Meta, and you can see that that has really jumped higher today, massive move. But you can see that the Go trend has been in place and has been persistent for some time. We saw some continuation icons. We saw the oscillator find support at 0, and now, of course, a massive, massive move today. But it's not just Meta. If you look at other securities such as Snap, you can see that that's been in a Go trend and has been moving sideways for quite some time. This is actually not the security I wanted to pull up. I wanted to pull up Spot. I'll come back to Snap because I did want to show you Snap, but it's a slightly different situation. But if you look at Spot, you can see that Spot as well has been in a very strong move relative to everything else. So you can see that Meta, you can see Spot, Spotify, really strong Go trends, and you can see how they're supported by positive momentum. If we look at these on a weekly chart, you can really just see what a strong trend that's been now going back for about a year. If you look back a year, we entered the Go trend, we found some support at 0, we broke out of a max squeeze, and then we've been off to the races ever since. And the same is true for Meta if you look at that on a weekly chart as well. You know, very, very strong moves since about a year ago. We're looking at February of last year when we entered the Go trend, found support at 0, broke out of a squeeze. We saw the trend continuation icons, and then this strong continuation that we've seen since then. So Meta and Spot looking very similar. If we change to Snap, though, Snap also in the internet sector, Snap looks a little different. So Snap might be one to consider. You can see that Snap has been in a Go trend, and it's been performing well up until sort of the end of December, where we found a high and then a sideways movement. And this, of course, the red triangle represents a counter trend correction icon. So this red triangle tells us that price may struggle to move higher in the short term. We saw an incredible run of momentum. You can see that here above 5 for an extended period of time. That's quite an extreme amount of momentum at overbought levels. And then when it came off, we see now counter trend correction readings. That tells us that price may struggle to go higher in the short term. And of course, it went sideways then for some time, and we turn our eye to the oscillator to see if it can find support at 0, and it struggled. So we're seeing that the Go trend has weakened, those aqua bars showing weakness. We see a lot of amber bars over this week, showing there's some uncertainty from the market. Now, this is interesting. A max go-no-go squeeze that was broken to negative territory, but immediately back at zero as we see a new go bar. So what would I like to see here? I'd love to see momentum get back into positive territory. If we can do that, then we can quickly say that momentum is confirming the trend that we see in place. So that would be very interesting for us to see momentum as positive, and we could then see that move higher. So the internet index really driving the markets higher, giving strength to equities. We'll see if this can continue. That was a short one for me this week. We'll be back with Tyler next week, but hopefully you found it useful. Reach out with any questions, info@GoNoGoCharts.com.